If you are a Canadian senior receiving OAS, GIS, CPP, or another retirement benefit, there is something important you need to know. The money coming from Ottawa may not be the whole story. There is another layer of senior benefits sitting underneath the federal system. And depending on where you live, that provincial layer can mean additional monthly income, a property tax rebate, a refundable tax credit, or help with other retirement costs. The confusing part is that these programs do not look the same across Canada. Ontario has its own programs, British Columbia has different programs, Alberta has a completely different system, Quebec does things differently again, and Nova Scotia has a property tax rebate that is particularly important right now because applications for the 2026 program are already open. These are not rumors, they are not secret government checks, and this video is not about pretending that every senior is entitled to thousands of dollars. Eligibility depends on your province, age, income, marital status, housing situation, and in some cases, whether you actually apply. But that is exactly why this information matters. Because a benefit can be completely legitimate and still be missed simply because a person did not know it existed. Today, I want to take you province by province through 5 major programs that Canadian seniors should know about in 2026. We will look at what each program is called, who it is designed for, whether it is automatic or requires an application, and what you should check for yourself. And stay until the end because I will also explain one simple step that connects many of these programs, your income tax return. For some seniors, filing that return is not just about taxes. It can be the information governments use to determine whether you qualify for additional benefits. So let's start with Ontario. If you live in Ontario and your income is relatively low, one program worth checking is the Guaranteed Annual Income System, better known as GAINS. GAINS is an Ontario monthly payment for low-income seniors. It is not OAS, it is not GIS, and it is not CPP. It is a provincial payment that can sit on top of the federal benefits you may already receive. For the 2026 benefit year, which runs from July 1st, 2026 through June 30th, 2027, eligible single seniors can receive up to $92 per month through GIS. That works out to as much as $1,104 over a full 12 months. Senior couples can receive up to $184 per month, depending on their circumstances and income. Now, $92 a month may not sound like a life-changing amount to everyone. But for someone living primarily on OAS and GIS, an additional $92 every month can pay a utility bill, help with groceries, cover transportation, or simply provide a little more breathing room. And there is another point that is easy to miss. GAINS is based on private income. For the 2026 benefit year, Ontario's published information says a single senior's annual private income must be below $4,416 to receive the maximum $92 monthly amount. For a senior couple, the corresponding private income figure for the maximum is $8,832. That does not mean everyone below those figures automatically receives exactly the maximum. Your actual amount depends on your circumstances, but it gives you an idea of how targeted this program is, and GAINS is specifically designed to work alongside federal OAS and GIS. So if you are already receiving OAS and GIS and live in Ontario, this is one of the provincial programs worth understanding. And remember this, the fact that you receive a federal benefit does not automatically mean you have checked every provincial benefit. The federal government and the provincial government administer different programs. That distinction is important. Now let's move to a different Ontario program. This one is especially relevant if you own and occupy your principal residence. It is the Ontario Senior Homeowners Property Tax Grant. The program can provide up to $500 back toward property taxes for eligible low to moderate income seniors. The important word here is eligible. The grant has income limits. For a single, separated, divorced, or widowed person, the maximum $500 grant is available when adjusted family net income is $35,000 or less. Above $35,000, the grant is reduced and eventually disappears at $50,000. For a married or common law couple, the maximum is available at $45,000 or less, with the grant reduced above that level and ending at $60,000. There is also a property requirement. You or your spouse must have paid Ontario property tax, owned and occupied your principal residence, and met the other eligibility conditions. And this program is important for another reason. It is not simply something that appears automatically for every eligible senior. You apply through the ONBEN application that forms part of your Ontario income tax and benefit return. You also report the property tax you paid, so if you are an Ontario senior homeowner and you have never checked the Senior Homeowners Property Tax Grant, this is something worth asking about. Do not assume that because you receive OAS or GIS, every provincial program has automatically been activated. Different programs have different rules. There is also another current development Ontario seniors should know about. Beginning August 1st, 2026, the income eligibility thresholds for the Ontario Seniors Copayment Program were increased for the 2026-27 program year. The individual annual net income threshold moved from $25,000 to $25,480. The combined annual net income threshold moved from $41,500 to $42,290. This program relates to the Ontario Drug Benefit System and can help eligible seniors with prescription drug costs. Why does that matter? Because this is a good example of why seniors should not look at their retirement benefits in isolation. You may be thinking about OAS, you may be thinking about GIS, you may be thinking about CPP, but your overall retirement support can also include provincial tax programs, prescription assistance, housing-related programs, and other benefits. And sometimes the thresholds change. So if you checked your eligibility several years ago and assumed the answer is still the same, it may be worth checking again. Now let's move west to British Columbia. British Columbia has a program called the Seniors Supplement, and this one is different from a typical application-based benefit. For eligible seniors, the Seniors Supplement is connected to federal OAS, GIS, and allowance payments. The 2026 rate table published by the province of British Columbia lists a maximum monthly senior supplement of $99.30 for a single senior or someone married to a spouse who is not receiving OAS, GIS, or the allowance. For couples where both are receiving OAS/GIS, the listed supplement is $110.25 per person, subject to the program's income and circumstances. The important point is not just the number, it is understanding that this is a provincial supplement sitting alongside federal retirement benefits, and British Columbia's system is income tested. The amount can decrease as taxable income rises. The province's published rate tables show that the supplement changes according to income and marital status. So if you are a senior in British Columbia receiving GIS and you are wondering whether there is a provincial supplement you need to apply for separately, the answer is different from what you might expect from an application-based program. The senior supplement is designed to be connected to the federal benefit information. That means the key question is often not simply, how do I apply for the supplement? It can instead be, am I receiving the federal benefits that determine my eligibility for the provincial supplement? That is an important distinction. And there is another BC program that homeowners should know about. If you are 65 or older and own your principal residence, you may qualify for the additional homeowner grant for seniors. For 2026, the total grant for seniors is up to $845 in the Capital Regional District, Metro Vancouver Regional District, and Fraser Valley. In other areas of British Columbia, the total can be up to $1,045. The province says the property assessment threshold for the 2026 grant is $2.075 million, with partial grants possible above that threshold under the applicable rules. That is important because you should not assume that a senior homeowner benefit is automatically the same throughout British Columbia. Where your home is located can affect the amount, and this is a property tax benefit. It is not a replacement for OAS, GIS, or CPP. It is another layer. This is exactly why provincial programs can be confusing. One person might tell you, I get OAS and GIS. Another might say, I get a senior supplement. Another might be talking about a property tax grant. They can all be talking about different programs. Now let's talk about Alberta. This is where the numbers become much more substantial. The Alberta Seniors Benefit provides financial assistance to eligible low-income seniors to help with monthly living expenses. And unlike some of the programs we have already discussed, this is an application-based program. For a single senior who is a homeowner, renter, or lodge resident, the maximum annual benefit is $3,946 when the income used for the calculation is zero. For an eligible senior couple in the same accommodation category, the maximum annual benefit is $5,918. There are higher maximums for certain continuing care situations, but please pay attention to the wording. These are maximum benefit amounts. They are not automatic payments for every Alberta senior. The actual amount depends on income, marital status, and accommodation category, and Alberta's eligibility rules are specific. You generally need to be at least 65. You need to have lived in Alberta for at least 3 months immediately before applying. You must receive OAS along with meeting the other eligibility requirements. And you must meet the program's financial criteria. There is another detail that could matter enormously. Alberta says that if you or your spouse have chosen to defer or delay receiving OAS, you are not eligible for seniors' financial assistance programs. That means delaying OAS can have consequences beyond the federal pension itself for someone who might otherwise qualify for Alberta Seniors Assistance. This is why seniors should never make a retirement income decision based on one benefit alone. Look at the complete picture. Alberta Seniors Benefit is income tested. The province says that, as a general guideline, a single senior with annual income of $34,770 or less and a senior couple with combined annual income of $56,820 or less may be eligible when the income includes a full OAS pension. But these are guidelines, not guarantees. The actual benefit calculation is more detailed. Alberta uses information from your tax return and considers specific deductions when determining the income used for the benefit calculation. This is another reason your tax return matters so much. Your tax return is not just a document you file once a year and forget. Government benefit programs can use information from it to determine eligibility. And if you are already receiving Alberta Seniors Benefit, your income information is needed each year to accurately calculate the benefit. The province also provides a seniors benefit estimator so people can get an idea of whether they might qualify. And there is an important protection for people applying for the first time. Alberta allows an income estimate in certain first-time application situations when previous year income does not accurately represent the current situation. So if your income has changed significantly, do not automatically assume that an old tax year tells the entire story. Check the current rules. Why applying matters in Alberta? This is one of the biggest lessons from the entire provincial benefit system. Some programs are connected to information the government already has. Others require you to take action. Alberta Seniors Benefit is one of the programs where you need to apply. The province provides an online seniors financial assistance application and also provides options for people who need a paper application or assistance. And Alberta says retroactive payments may be available for up to 11 months before the date it receives your completed application, subject to the program's conditions. That does not mean you should wait. If you think you may qualify, checking sooner is better than assuming the money will somehow appear automatically. The current Alberta payment schedule also shows the August 2026 payment date as August 25th. So if you are already receiving the benefit, that is another date worth keeping in mind. Now let's move to Quebec. Quebec has a senior benefit that works differently from the monthly programs we've been discussing. It is called the Senior Assistance Tax Credit. It is a refundable tax credit for eligible modest income seniors, and the maximum amount can be significant. For the 2025 tax year used for the 2026 credit, the maximum is $2,000 per eligible individual who was 70 or older on December 31st, 2025. If both spouses are eligible and both were 70 or older, the couple could receive up to $4,000. Now this is where you need to be careful. Up to $4,000 does not mean every senior couple gets $4,000. The amount depends on family income and eligibility. For someone without a spouse, the full amount can apply when family income is no more than $27,835. For someone with a spouse, the corresponding threshold for the maximum credit is $45,270. Above those amounts, the credit is reduced by 5.40% of the portion of family income above the applicable threshold, and the credit eventually disappears at higher income levels. For a single senior, the maximum family income limit is $64,873. For a couple where both spouses are eligible individuals and both were 70 or older, the maximum family income limit is $119,345. Different circumstances produce different maximums. So again, don't look at one number and assume it applies to everybody. Here's what makes the Quebec program especially interesting. Revenue Quebec says you do not necessarily have to claim the credit yourself. If you are eligible but do not claim it on your return, Revenue Quebec can calculate the credit for you. That means filing your income tax return is extremely important. The credit can be paid after the return is processed, subject to the program's rules. So if you are a Quebec senior who was 70 or older at the end of 2025 and your income is within the applicable range, this is something you should check. Again, the lesson is not everybody gets $2,000. The lesson is there is a legitimate provincial refundable tax credit worth checking if you meet the conditions. That distinction is critical. Now let's talk about Nova Scotia. This is perhaps the most time-sensitive program in today's video. The Nova Scotia property tax rebate for seniors helps eligible low-income seniors with municipal residential property taxes. The rebate is 50% of the municipal residential property taxes paid for the 2025 tax year, up to a maximum of $800, and applications for the program are currently open. There is a deadline. You can apply until December 31st, 2026. That means this is not something you should put off simply because the deadline is still months away. The government says eligible applicants must have paid their 2025 municipal residential property taxes in full, have their name on the property title, and be eligible to receive GIS or the GIS allowance from Service Canada. And there is a detail that could be important for some people. The Nova Scotia government says people who received the rebate last year will receive an application form by mail. But if you are eligible and did not receive one, that does not necessarily mean you are ineligible. You need to check the requirements and application process. Think about the difference between these two situations. A senior receives GIS. They own their home. They paid their municipal property taxes. They meet the provincial requirements. But they assume that because the government already knows they receive GIS, the property tax rebate will automatically appear. That assumption could be a problem. The Nova Scotia program is application-based. The government specifically says applications are open and the deadline is December 31st, 2026. So if you are in Nova Scotia, this is one of the programs I would put near the top of your checklist. Do not wait until the final week of December. Get the information together. Check the official application instructions. And if you are unsure whether your GIS status qualifies you, contact the appropriate government office and ask. Now, if you live in Manitoba, Saskatchewan, New Brunswick, Newfoundland, and Labrador, Prince Edward Island, or one of the territories, I don't want to give you a made-up number just to make this video longer. Provincial and territorial programs change, names change, income limits change, deadlines change, and a number that was correct 2 years ago can be wrong today. That is exactly why you should use your provincial or territorial government's official website when checking a benefit. Your province may have a senior tax credit, it may have a property tax program, it may have an income supplement, it may have a prescription or housing-related program, but the key is to verify the current year. Do not rely on a social media post, do not rely on a random blog, and don't assume that because your neighbor received something, you automatically qualify for the same thing. Your age, income, marital status, home ownership, and province can all change the answer. Now let's talk about the biggest mistake I see in conversations about government benefits. People ask, am I getting OAS? Am I getting CPP? Am I getting GIS? And then they stop. But those are federal programs. Your province may have another layer. The better question is, am I receiving everything I qualify for from both the federal government and my province? That is a much better question, because the Canadian retirement system is not one single check. It is a collection of programs. OAS is one, CPP is another, GIS is another, and then provinces and territories can have their own programs. Some are monthly, some are annual, some are tax credits. Some reduce property taxes, some help with prescription costs, some are automatic, others require an application. And that last difference is extremely important. If there is one practical message I want you to take from this entire video, it is this: file your income tax return every year, even if you have little income, even if you owe no tax, even if your income is mostly government benefits. Your tax information can be used to determine eligibility for multiple government programs. We have seen this throughout the examples today. Ontario Gains uses income information. The Ontario Senior Homeowners Property Tax Grant requires the own bin application as part of the tax return. British Columbia's senior supplement is tied to federal benefit information and income. Alberta uses income tax information to determine its seniors benefit. Quebec's Senior Assistance Tax Credit is calculated using family income from the tax return, and Nova Scotia's property tax rebate has eligibility tied to GIS or the GIS allowance. So the tax return can be much more important to a senior than simply determining whether they owe money to the government. It can be part of the process that determines whether government support comes back to them. There is another situation that deserves attention. Suppose your income was higher when you were working, you retired, your spouse passed away, your pension changed, your investment income changed, or your household circumstances changed significantly. You may have been ineligible for a program several years ago. That does not necessarily mean you remain ineligible today. This is especially important for income-tested benefits. A change in marital status can affect household income. A change in accommodation can affect Alberta's Seniors Benefit. A change in property ownership can affect a property tax program. And a change in age can trigger access to programs that were not available before. So don't make the mistake of saying, I checked 5 years ago and I didn't qualify. The correct question is, do I qualify under the current rules? Let's make this simple. If you are watching this video and want to know what to do next, write down your province, then use this checklist. If you're in Ontario, check gains if you are a low-income senior. Check the Ontario Senior Homeowners Property Tax Grant if you own and occupy your principal residence. And if prescription costs are a concern, check the updated Seniors Copayment Program income thresholds for the 2026-27 year. If you're in British Columbia, check whether you qualify for the Senior Supplement, and if you are 65 or older and own your principal residence, check the Homeowner Grant for seniors. If you're in Alberta, check the Alberta Seniors Benefit. Remember that this one requires an application, and use the official Seniors Benefit Estimator if you want to see whether you may qualify. If you're in Quebec, if you were 70 or older on December 31st, 2025, check the Senior Assistance Tax Credit. Remember that the maximum can be $2,000 per eligible individual, but the actual amount depends on family income and circumstances. If you're in Nova Scotia, check the property tax rebate for seniors. The current program offers 50% of eligible 2025 municipal residential property taxes up to $800. And the application deadline is December 31st, 2026. There is one final warning I want to make extremely clear. When you hear up to $3,946, up to $2,000, up to $800, up to $500, that does not mean the government is sending every senior that amount. Up to is the maximum. Your actual payment or credit can be lower. Some programs are income tested. Some depend on marital status. Some depend on where you live. Some depend on your housing situation. Some depend on whether you meet a particular age requirement. And some require you to apply. So don't build your household budget around a maximum amount until you have confirmed that you personally qualify. The purpose of this video is to help you find the programs and ask the right questions. It is not to promise you a check. You do not need to pay a stranger on social media simply because they claim they can unlock a government benefit. Start with the official government website. If you are unsure, contact the relevant government department. And be careful with anyone asking for sensitive personal information or payment in exchange for a supposedly guaranteed government benefit. Legitimate government programs have eligibility rules. They do not need fake urgency. And nobody should be promising you an amount you have not been assessed for. Here's what I want you to do after watching this video. First, write down your province. Second, write down your age. Third, look at your latest tax return and know your approximate income. Fourth, know whether you are single, married, common law, or widowed. Fifth, if you own your home, know approximately how much property tax you paid. Then check the official provincial programs that apply to you. This process does not have to take all day. And if you have difficulty using a government website, ask a trusted family member, community organization, tax professional, or government service representative for help. The important thing is not to ignore the programs simply because the names are confusing. Let's step back for a moment. Canada's federal retirement system gives eligible seniors access to programs such as OAS, CPP, and GIS. But your retirement income does not necessarily stop there. The province where you live can have its own programs. Ontario has gains and a senior homeowners property tax grant. British Columbia has the Senior Supplement and additional homeowner support for eligible seniors. Alberta has the Alberta Seniors Benefit. Quebec has the Senior Assistance Tax Credit. Nova Scotia has its property tax rebate for seniors. These programs are different. The amounts are different, the eligibility rules are different, the application requirements are different, and the deadlines can be different. That is why there is no single answer to the question, how much money should a Canadian senior receive? The answer depends on your circumstances. And that is also why you should never compare your retirement payment directly with your neighbors. You may live in different provinces. You may have different income. You may have different marital status. You may own a home while they rent. You may be receiving a provincial supplement they do not qualify for, or they may be receiving a benefit you have never applied for. So before you close this video, remember these 5 things. Number 1, federal benefits are not the whole story. Number 2, your province may have additional senior benefits or tax programs. Number 3, some benefits are automatic, but others require you to apply. Number 4, your income tax return can be extremely important for benefit eligibility. And number 5, never assume that an old eligibility decision is still correct today. Rules change. Income changes, household circumstances change, and government programs can be updated. The most important example right now is Nova Scotia, where applications for the 2026 property tax rebate for seniors are open and the deadline is December 31st, 2026. If you are eligible, that is something worth checking now rather than remembering in December. And if you're in Ontario, British Columbia, Alberta, or Quebec, the programs we discussed today may also be worth reviewing based on your own circumstances. If this video helped you understand the difference between federal and provincial senior benefits, do one thing before you leave. Tell me your province in the comments. Just write Ontario, Alberta, Quebec, Nova Scotia, or your province or territory, because I want to know which programs Canadian seniors are most confused about. And if you know another senior who is living on a fixed income, send them this video. Sometimes the biggest problem is not that a benefit doesn't exist. The problem is that nobody ever told the person to check. Remember, these programs are not guaranteed payments for every senior. Eligibility depends on your personal circumstances, and the official government source should always be your final check. But if you are eligible, there is no reason to leave a legitimate benefit unchecked simply because you didn't know the program existed. Know what you may qualify for. Check the current rules. File your taxes. Apply when an application is required. And don't assume that the federal check is the only support available. I'm glad you stayed until the end. And I'll see you in the next Canadian Seniors Update.